Welcome back to Stocklabs for another market recap. It's Friday night, so let's see how we did for the third week of July. And it was a pretty exciting week for markets in general and people that were following along with last week's recap. We basically got across the broad indices exactly what we were looking for. Let's just get straight into the good stuff. So last week we were talking about we were waiting for this 6-month hybrid oversold signal to flag, and we thought that if we had weakness early in the week that we'd get the signal, which gave us the all clear, and that's exactly what happened. Monday was a down day, decent down day. We were down, I think, maybe 2% in the S&P intraday, closed with a little bit of a rally, but it didn't matter. The oversold signal still locked in. And from there, I think everyone basically saw what happened. It was 4 straight up days, Tuesday through Friday. The small caps bounced hard the first couple days and then stalled out towards the end of the week, where our larger cap, especially tech stocks, sort of extended the rally a little more than having small caps participate. They kind of fell by the wayside. But the overall indices did pretty well. Now, we can get into the industries to see what the makeup of our bounce sort of looked like. And pretty broad. I mean, financials and materials only really bounced enough to recover some of last week's losses, on a median stock basis, and the gains were sort of concentrated more across the technology services. Industrials kind of a standout, and healthcare, with utilities being the only down sector by a little bit. Now, that's usually pretty common for periods that end up being risk on, as the utilities just trail. And on an individual sector basis, semiconductors, drugs, construction, what else do we have here? Application software, we're always happy to see that high on the list. And other software type stocks, other semiconductors. So pretty broad bounce. Now, the very top of the top, over 5%, was a little thin, but you did have 25 sectors with median returns over 3%, so not bad. I think the overall bounce in the S&P was about 3.5% from Monday's close to Friday's close. Worst performing sectors were, so Chinese stocks, which got hammered on Friday with whatever the Chinese government is trying to do to them. I didn't really read up on too much of it. I just saw that a bunch of the U.S. listed stocks here were down like just atrocious. The numbers were like 10, 30, 50% to the downside. So, a real beating there. Gold down 2% for the week. Silver down 2.3% for the week. And yeah, but really not a whole lot. I mean, some of these are just like fractionally down. You can see like the list really starts to go towards the zero line to up pretty quickly. So this is, so less than 50 sectors down on a median basis. All right. And for our screener, I'm just going to look at how we sort of do for the market cap sorted returns. And 1 to 5 billion, 1.25%. And mid caps, 2.25% up. Large caps, 1.76%. And mega caps, 50 to 100 billion, 2.24%. And Terra caps, the biggest stocks, 1.88%. Okay, so not a whole lot to be gained from this. The distribution of returns is, I would say, uniform. 1 to 5 billion sticks out a little to the down, a little as an underperformer, plus 1.25%, versus the rest of them were all 1.75 to 2.25%. That's pretty, I would call that an even enough distribution. So if you were anything basically in the upper mid cap to up to Terra cap stocks for this week, it was a pretty good week and should have been a pretty smooth ride up, especially from the oversold signal. If you were adding positions on that signal, then really you had no issues all week. If you were messing around with some of the smaller cap stuff, you got into, it got a little dicey after the initial bounce. It sort of became more of a crapshoot towards the end of the week in those names, but the rest, anything larger size, was just smooth sailing. So we have been, sort of seeing in these recaps over the last several weeks that the larger cap stocks have been the outperformers. They've been the ones driving the price action. They've been the ones that have been steadiest. So it's not really a surprise that the small cap bounce coming out of the oversold signal would have stalled out a little quicker than the others, just because those stocks have been harder to trust in general the past several weeks. So larger cap stocks looking good, looking pretty, uneventful, but smaller cap stocks, take a little bit more finesse to navigate, I guess. You sort of have to have your wits about you a little bit more and be more, I guess, careful about where you're taking longs or how you're managing trades once you're in them. So no big deal. It's just something to consider. I'll look at intelligence. Wow. Okay. So intelligence has nothing for the next 5 days. It has this Mexican ETF or Mexico. Is it Mexican banks? No, it's just Mexico. Like Mexico's S&P 500, whatever. Which that's it's kind of surprising, but also kind of informative too. That nothing at this point is rated by intelligence as being overly bullish. Doesn't mean that stuff is bearish. It just means that your upside is probably capped from here into month end. I'll do this again where I'll invert the parameters, just looking for downside. Okay, so this isn't problematic because Hibbs is high beta, SRTY is bearish Russell, and TISA is bearish Russell too. But these bearish ETFs are rated as bearish, which is overall bullish. So what this is saying is sort of expect maybe the small caps to continue their rally after the late week pause this week and catch up a little bit to the rest of the indices. So we'll see if it happens. I don't know. Um, to me, the small cap trade is not that interesting. So, I don't really worry about it too much. But we'll see what the action sort of looks like next week. I will go back to. I just want to tie one thing up with this. So we got our overbought, oversold signal, and we got a pretty strong bounce coming out of it for S&P and the Qs. So S&P, I said, was up 3.5% from Monday's signal. So at this point, I'm just going to pull up. Well, I'm going to pull up the stats for our 6-month signal. So 6-month oversold, and I'm on the hybrid side. So the 10-day average return for this signal for the 5 prior signals that we have is a little under 3%. Now, we made 3.5% in the first 4 days. So my conclusion on this is that kind of the level we're at right now is, that's it. That's it for this bounce. If you missed it or whatever, don't worry about it. I mean, just, pay attention for the next one. There's not really any reason to, I don't think there's any reason to chase anything here into month end. I would expect the last week of the month to be pretty quiet. We do have some Terra Cap, large cap, mega cap earnings for tech coming out during the week. Now, obviously, the expectation is that those will move the market big one way or another. But to me, I would think that, they're going to be mostly non-events in aggregate. Maybe you'll have one that really pops and another one that sells off, and it'll be, quote unquote, big news at some point. But I think overall, the market's just coasting into month end, and I would say early in the week, you can probably fade whichever direction the market goes. So if we pull back a little bit Monday, Tuesday, I think you could probably just buy it fairly easily. If it rips right out of the gate the first couple of days of the week, it's probably not a bad idea to just take some things off and get ready to reassess everything in August, because overall for the week, I think we're going to close more or less where we're at now in the overall indices. I think that the your upside is capped, but it's not going to fall apart either. So that's basically it. Pretty successful bounce, and we'll be back next week checking out how all this plays out, how the month played out, and we'll recap the Stocklabs quant as well, like we always do. And good luck, everyone. We'll see you next week.